Is there any chance that Sanusi is going to pull a rabbit out of the hat? Or are you looking at NPR being kept on hold at 12% as he's alluded to so far?
Well, I think you can never rule out the possibility that rates will be raised, but I very much doubt it, and I think the consensus reflects that as well. I mean, if you look at the past interest rate meetings, he has often surprised the market. So, for example, if we were expecting a 50 basis point rise, sometimes he makes it 75, or back in October, most people were going for 100, and then you had 275. So you never rule out the possibility of a surprise, but I don't think the chances are very high.
So then let's throw forward to the rest of the year. We've had the finance minister saying that we should have, in fact, interest rate cuts, but there are, of course, a lot of inflationary pressures right now. What is your outlook for inflation, and what are the key risks that you're looking at with regards to that picture?
Yeah, well, we see inflation going to an average of 12.5% this year, and I think if it follows a normal seasonal pattern, it'll peak between July and August, and I think that'll happen between 13.5% and 14%. So with that backdrop, I would see interest rates peaking at 13%, so another 100 basis points from here.
Sanusi's also talked about the removal of the fuel subsidy, saying that the inflationary impact could have been exaggerated in the market. And he's also said that stamping out smuggling as a result of sector reforms in the oil industry could actually be a positive for the inflationary outlook. Just run us through your thoughts on those comments that he's made with regards to smuggling in particular.
Yeah, well, just on the first point that you mentioned about the impact of the fuel subsidy reduction being exaggerated, it's very hard to say because no one knows exactly how much businesses are going to be raising costs in the hope of protecting their margins. And those are the second round effects. Those are very difficult to predict and very difficult to measure. So I think it's probably premature for him to say that the impact's being exaggerated. If you look at what the bond market's done, it certainly hasn't suggested to us it's expecting a surge in inflation. So I would contest that. Onto the idea that the reduction of fuel subsidies could be positive for inflation. Well, yeah, if it strengthens the currency, it certainly could be. I think, Sanusi's on the record as saying that local consumption is about 35 million liters a day. Imports at times have been as high as nearly 60 million liters a day. So if you get the import bill down, you improve the external trade position, and if that's reflected in the data, then it should be good for the currency and therefore good for inflation. So I think that will take a few months to happen, but it's possible.
How confident, though, is the market perception right now with regards to the reforms that are being tabled by government? Because, of course, it will take a lot of willpower and courage for the president to enact these type of reforms and stamp out the corruption in the oil sector right now.
Absolutely. Well, I think for the better part of a year, our view was that there was very little progress on reform. Certainly, we didn't have any concrete evidence of things happening, and that was disappointing because expectations were very high when Goodluck Jonathan was elected in April. That being said, I think the administration's taken a very big political risk by reducing the fuel subsidy in the way that it did, and so far that seems to be paying off. If that can be parlayed into more progress on reforms, that'll be very positive. I think the impression that investors have right now is that at least the ball might be moving. We've been hearing things about power sector reforms progressing, a new version of the petroleum industry bill being submitted to Parliament. So I think if you can take the momentum that was created by reducing the fuel subsidy and translate that into progress in other areas of reform, then you do have a very positive picture.
And of course, you need the private sector vote of confidence because you need them to come to the party in terms of investing in some of these government projects. What are the other key projects that we need private sector investment in Nigeria right now to get these reforms on the go?
Well, I think one big area that hasn't been mentioned right now is the indigenization of the oil industry, and that goes hand in hand with the with the petroleum industry bill. And I think there is an opportunity for local banks to be financing indigenous players in the petroleum industry in terms of buying up assets that are being divested by the likes of Shell and other companies. So that's another big area in addition to power sector reforms.
Sanusi, of course, has a lot of respect from the market given his overhaul of the banking sector, and markets will be listening in closely to what he has to say about his outlook for the economy. He's also referred to a lot of distortions in the Nigerian economy. Run us through what he's likely to comment on with regards to those today.
Yeah, well, if you go by some of the comments that he's been making recently, he's saying things like the country produces quite a bit of cassava, but then ends up importing cassava starch, and that's just another example. I mean, the classic one is the country produces lots of crude oil and then ends up importing refined, and that reflects the absence or the small size of the local manufacturing sector. And I think that's what he's trying to target. That's what, when you hear him talk about, you know, the CBN acting in a role as sort of a development bank, that's what he's getting at. He would like to eliminate some of those distortions, and I think the reduction of the fuel subsidy is a very big and obvious step in that direction, and I would hope that other steps will follow, but I think it will take time.